Good morning and welcome back to Almus Market Mornings. President Trump brought some clarity to the entire tariff situation. Not only would tariffs be implemented on Canada and Mexico starting March 4th, a further 10% tariff would be imposed on China. Equities are having a bad time. Yesterday, Nasdaq fell almost 3%. Today morning, Nikkei is down 2.6%. And in currencies, dollar has strengthened, trading firmly above the 107 mark. Good morning, JK. What's going on with this risk of sentiment? What's driving this?
Morning, Swaraj. Yes, it's definitely risk of environment that we are, living in right now, and there have been several factors. In fact, the global markets yesterday were dominated by lots of economic news, the Trump tariffs, and sharp fall in the stock market. All of them were actually related to each other. First on the economy, claims, the weekly jobless claims in the US hit 9-week high, coming from the job cuts initiated by the Department of Government Efficiency. And the expectation is that this number can go even higher as the impact full impact of the job cuts, by the department is felt. We also had the second estimate of fourth quarter GDP, unrevised at 2.3%. The second estimate is based on a more complete source data than the advanced estimate. Now, beyond that, durable goods orders were the only good news yesterday we had on the economy side. It rose by 3.1%, compared to a drop of 2.2% that was seen last month. Pending home sales were down. So on the economy overall, we did not have any great news. In fact, the market was more looking at the jobless claims, which have shot up by 22,000 and expected to increase more. Then came the hit from Mr. Trump, and he said, finally, the tariffs of 25% on Mexico and Canada will take effect on March 4th, putting rest to earlier news, which said that that could also be postponed to April. It is also, said that there will be additional 10% in a tariff on Chinese imports. We did have a Canadian Prime Minister saying we will have an immediate and extremely strong response if they used imposes tariffs from next Tuesday. Of course, we also did have some data from Europe where Spanish inflation was more or less steady and did not at least threaten a change to the expectation that ECB will cut rate next week. But then markets had a lot to worry, and therefore they fell in one heap. The economic news was not so great, particularly on the jobs market. Trump tariffs, again becoming a reality, very close to becoming a reality. What impact it will have, going by historical evidence, it will slow down the global trade, and what impact it will have eventually on the global economy is still to be assessed. So the stock markets did not have a good backdrop for its performance. So we had down, which was down, and Dow, which was down 0.45%, and it was up 1% at one point of time. S&P was down 1.959%. Nasdaq was down a whopping 2.78%. And as far as Nasdaq is concerned, it has fallen almost 8.5% from the recent all-time peak. And market was apparently not satisfied with the better numbers announced by NVIDIA. The stock has also fallen 8.5% in the last, in yesterday's trading session alone. And broader market is also looking at the cooling economy and the tariff news, which will ultimately hit the global trade and all economies. Now, there will also, hint of some tech measures reducing their AI investment. So Nasdaq has become the most underperforming indices in the US after being an outperformer for a long time. And markets are now, on the reality check as far the valuation of the market is concerned. Now, the part of GDP which also shows the price pressures actually showed an increase. So now we are seeing weak economic data, combined with inflation fears growing, and that can intensify if the tariffs become a reality. Therefore, we are probably going into a stagflationary situation. Um, I mean, as far as the dollar is concerned, it rebounded against most currencies despite a weak series of data. And investors more focused on negative impacts of the tariff and how the weak economies could perform under its weight. But look at Europe and China, which are still struggling, and the tariff can only push them back down a bit more. Now that justifies or that explains why the dollar has not fallen much, despite yields having dropped more than 50 basis points from the peak in the last 6 weeks. So the dollar has lost only marginally despite this big drop in the yields. So I think the tariff news has actually overshadowed everything else. And I think it's we need to follow this very closely because the story is not ended. There is yet no word about what tariff will be imposed on Europe. The reciprocal tariffs will, as of now, expected to come to reality on April 2nd, although subject to report to be submitted by the US Trade Department. So we are overwhelmed by the tariff news and markets are reacting accordingly. Yes, definitely it is a risk off environment and it has also had its impact on the Asian markets, all of which have now seen a drop. I think the valuation concerns will also become in the forefront as far as the US market and some of the European markets are concerned because they have been rising incessantly. And when they fall, they will also have an impact on the Indian market. As far as the rupee is concerned, the weakness extended yesterday to test the resistance at 87.40. And as expected, PSU banks appeared there with the intervention to sell dollars to stop rupee from falling further. While there was a good size reaction of the dollar falling to 87.10 immediately, strong demand resurfaced at the lows, keeping the dollar mostly above 87.20 levels. Now, retreat in other currencies, as I explained, in the major and EM currencies, with the start of tariffs from March 4th, staring at the economies of Canada, Mexico, and China, kept the rupee sentiment weaker as well. Now, while rupee is more fairly valued at current levels of 87.20 compared to a month or two back, global factors are likely to keep it on the weaker side, and we may see fresh pressures to break towards all-time highs of 87.95 once again in the weeks to come if the dollar index continues to rise and the tariff news are not seeing any relief. So let's not also forget that reciprocal tariffs are likely to be implemented from April 2nd, which will have an impact on India as well. No, yeah, and apart from that, tariff sizable sell-off in global markets will have its impact on the Indian equities. It's already soft and seeing a steady sell-off from the FIs, and this could continue as well. So the you know negative set of global cues and the FIS sell-off or a deadly combination which keep the rupee on the weaker side. I mean, any strength is only initiated by RBI selling, and once again having broken above 87, it looks like the sellers will be hesitant. Natural sellers will be hesitant to commit themselves. We of course have the GDP estimate on India for September-December quarter of 2024 expected to improve to 6.3% from 5.4% in the previous quarter. And I'm not sure how much the market will be reacting to that because that's anyway a backward-looking data. We are already getting into March month in the new year. Yes, we are also having a close watch on the US economy when we are observing pockets of weakness and the latest evidence coming from yesterday's data. This US economy weakening could have an impact on the other markets also. Immediately because including India because the trade could get affected, our exports could get affected. I mean, this could continue until policymakers respond with either monetary or fiscal measures to address the weakness. But we may be speaking a bit too early because we just started to see those signs of weakness, and we'll see how deep it goes. On the global market, we have lots of data today. The inflation numbers from France and Germany in Europe, and the or PC number from US. These will be the main focus of the markets. Thank you. Have a good weekend.
Thank you, JK. And it seems not a very good time to be associated with equity markets. They are having such a bad time, and there is a strong risk of sentiment. US equities lost ground yesterday, especially Nasdaq. Nvidia, the bellwether AI stock, also led the losses. Markets are awaiting any tariff update on reciprocal tariffs plus the specific tariffs on Europe after all the tariff-related updates we got on Mexico, Canada, and China. Uh, when we come back to rupee, it weakened to 87.40, but PSU banks intercepted and it led to some cool off. But if the dollar index continues to rise, further pressure on rupee is possible. Indian equities, which are already soft with steady FII outflows, may see more outflows. And one important data today from the Indian side would be the Q3 GDP number. That's it from us today. Thanks for listening. Have a very good weekend, and we'll see you all on Monday with a fresh round of updates.